Welcome back to day 100 of the Storage 100 series. I'm Joe Downs with the Storage Moguls. And before we get into the kinds of tenant insurance programs, if this is your first time watching, I want to make sure you know we have a community launching in a few short weeks called the Storage Moguls. And you can pre-register for the launch right now at storagemoguls.ai. That's storagemoguls.ai, not .com. It's .ai because it's an AI-powered community. We have GPT tools, multimodal learning that's powered by AI. There's a lot of science behind that. And like I said, you can start for free, register now, start for free. When we launch, you can advance at your own pace. All right, today we're diving into tenant insurance programs, a topic that is often overlooked but holds significant potential. We touched on it briefly a couple episodes ago. We're going to go a little deeper today. We're going to explore how these programs can become a hidden profit center for your business. And we're also going to learn how it's not just about offering a service, but if you treat it the right way, it's really smart revenue generation. We will uncover the simple mechanics behind these programs and their financial impact as well. So let's get started by defining what a tenant insurance program actually is. So it's a straightforward way to add value for your tenants and then also revenue for you. So you partner with, there's different options out there, companies like Minico or Universal. Doesn't cost you anything up front, and we'll cover more options later. And your tenants purchase the insurance when they move in. So it's just like part of their monthly rent, often paying that there's a small monthly premium as part of the rent. And the best part is you earn a pretty nice commission on it, 30 to 50% of every dollar collected, negotiate for 50%. This program protects what your tenants are storing and then gives them and you peace of mind. So it's a nice little true win-win. So let's look at the numbers and see the real impact on your bottom line, because the revenue math here is fairly compelling and shows how quickly these programs can add up. So let's say you have 200 units at an 80% compliance rate or success rate, and let's say you're charging $12 as the premium as part of that rent. Now you're looking at over $960 in monthly profit. Gross it up 80%, and then NOI or gross profit there. Yeah. So that's pure profit flowing right into the business. Now imagine that growing to over 23,000 annually for like a $4,000 unit, 400 unit facility. Excuse me. These aren't just hypothetical theoretical numbers here. They represent tangible, consistent income, which brings up an important point as to why this insurance is so important for both your tenants and your business. Many tenants mistakenly believe your facility is responsible if something happens to their belongings. That's a big misconception. It's simply not true. Tenant insurance protects them by reimbursing them for losses from a fire, theft, or water damage, but it also protects you by acting as a liability shield. So when the tenants have insurance, they file claims with the insurers, not against a lawsuit against you, thinking that that's the way to go. It's a win-win. So this is the win-win I was talking about, right? So what's the best way to implement these programs for maximum effectiveness? You ask, well, it's the choice between making the insurance mandatory or optional. And that significantly impacts your compliance rates and therefore your revenue. So mandatory programs see an 80 to 90% compliance because tenants typically choose your convenient program over the hassle of anything else. So optional programs or management requirements, or lack thereof being optional, however, drop to 50 to 60% compliance as tenants try to save money. So the winning strategy here is to make it required with an opt-out waiver. So this maximizes compliance while staying legally sound and ensures most tenants are covered, protecting both them and your business. And this is where the rubber meets the road here. It's a lot simpler than most operators expect. So step one, choose a provider. We'll cover that in detail shortly. Step two, update your lease. Add an insurance addendum. This is the legal language that makes the program mandatory with an opt-out. And it's what protects you if the tenant ever tries to claim they weren't informed. Step three, train your staff. Give them a script. Make it simple. We require insurance for your protection. It's $12 a month, and it's already included in your total, and and right on. That's the whole script. No pressure, no pitch, no awkward silence. Roll it out to new tenants immediately, then work through your existing tenant base at renewal. All right, let's take a look at the profit math, because once you see the numbers, you'll wonder why you waited. All right, so we've discussed the practicalities, and here's the big picture. Tenant insurance is pure profit for your business, and it's not just a small gain. It's going to add $5,000 to $15,000 annually, depending on your facility's size. In this example, we're talking about here adding $53,000 in value at a 7 cap using a 35% expense ratio. So 100 units at an 80% adoption rate, at $6 profit, at 50% profit. You're talking about adding $53,000 in value. At 300 units, you're looking at an additional $11,200 in NOI per year, and at a 7 cap, that's $160,000 in value to your facility. All right, so let's talk about the actual numbers here, because this is where it really gets simple. So if the retail price you charge your tenant is typically $12 a month, your wholesale cost, what you actually pay the insurance provider, is $6 to $8, depends on the program. You're going to negotiate up to that 50% or put that program in place if you're smart. That spreads your profit, and it's yours to keep on every single unit every single month. Now, the way you present this at move-in matters. So don't ask if they want it. Like I was saying before, frame it as a standard for your protection. Insurance, $12 a month, it's already included in your total. That framing alone is the difference between a 20% adoption rate and 80%. And when a tenant pushes back and says they already have homeowners insurance, you simply say, great, just bring in the declaration page or deck page listing us as an additional interest. 99% of them won't do that hassle. Now they got to call their insurance company. They're just going to pay the $12. All right, now that we know how to price it, let's talk about who you're actually partnering with. So there are 4 kind of main players today. You can probably find more you'll encounter in the space. You have SBOA, Storage Business Owners Alliance. Good starting point, especially if you're already a member. Bader is an industry veteran with a long track record, strong operator relationships. StoreSmart offers comprehensive coverage options and is known for being easy to integrate with your management software. And Tenant One runs flexible direct programs that give you more control over how the product is presented. When you're comparing them, focus on one number above anything else, and that's the revenue share percentage. That's what's going to determine how much of that $12 or more retail premium actually ends up in your pocket. So once you picked your provider, implementation pretty straightforward. We've already covered exactly how to do that. All right, covered a lot here on tenant insurance and its benefits. If you found this information valuable, please like, subscribe, and share this content with anyone in your self-storage industry who might be leaving revenue on the table. They will definitely thank you later. Up next tomorrow, day 102. Running out of days here. Expanding units. When does it make sense? And speaking of expansion, after we finish Storage 100, Boat and RV 100 starts right up. So if you thought self-storage was profitable, wait until you see what Boat and RV storage can do. Lastly, remember, tenant insurance can be a hidden profit center for your business if you aren't offering it yet, but it isn't just about that service. You're not selling something. It's about smart revenue generation. So do it right and reap the rewards. For more ways to maximize your self-storage facility, you should consider joining Storage Moguls at storagemoguls.ai. Storagemoguls.ai. You can start for free, like I said earlier, level up at your own pace. And if you register soon, you will get a free GPT that we built and use ourselves to analyze deals. It's a quick deal analyzer. It's pretty awesome. Remember, folks, if self-storage is what brought you here, wait till you learn how to see and understand and evaluate all the other verticals that make it that much more exciting, including Boat and RV, which we're doing next. Join us at Storage Moguls, and we'll transform you from someone interested in self-storage to a storage mogul that your friends are going to start talking about. See you tomorrow.